everyone, welcome to the Ichimoku Charts.com daily analysis for gold for Monday, October 15, 2012. Well, a continuation of the trend to the downside today, and a candle with a lower high and a lower low, and once again a fairly large black body candle suggesting that the sellers have made a substantial amount of net bearish progress on the day between the open and the close, as they have the previous day's trading, so a continuation of that momentum to the downside. But looking at this candle, the sellers have closed only just below the midpoint level, suggesting that the sellers have still closed with control, but it is a very, very weak amount of control, and we do have this largish shadow on the bottom of this candle highlighting the market's interaction with this zone of previous support and resistance that I've shaded in the yellow colour. I've mentioned it quite a few times. Previously we saw that area finding support. Today the market's found support and has bounced off that level, so that is a very, very strong level of support for this market. Now, looking bigger picture, I highlighted this megaphone type pattern, this highly volatile trading where the market was making higher peaks but lower troughs, and it does suggest that it is a major top for this market. We have a very strong prior uptrend in place, very fast momentum in that time frame, and now this sideways movement here with this type of pattern, which is a broadening formation. The only trouble here is that we have very strong support down below, and if you look at the lower boundary here of this pattern, then the lower boundary extends down below the this strong area of support, and it is really hard to trade these types of patterns. Importantly though, we saw the market test just to this previous swing low and close at that level. That's at the 1740 level roughly, and that is an important level for the market for tomorrow. We have seen major buying come back in here. It has been a previous area of resistance, and if we do see the market trade in a bearish manner down below there, we could see the market trading down to through this zone of support down and testing around the 1700 round number level of support. Moving forward from there, however, we do have the market interacting, or we will have the market interacting with the cloud, and that will be important. It will strengthen the support around this 1700 level and just below it, so that is quite significant. Now, just looking at the Fibonacci extension, and we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down, and here we've seen the market test to the 100% level, trade below there and be rejected from there. So that does suggest that there is potential for a change of trend, this strong rejection from below that 100% level at the 1737 area. But if we look at the candle, there is no support from the buyers, just this shadow on the bottom with the highlighting the loss of commitment by the sellers. But we aren't seeing any strength from the buyers, and it isn't suggesting that we will see a change of trend. But we do need to watch how the market reacts to this level. Quite significant is the market's interaction also with the Fibonacci retracement. We're looking at the relationship of the current first time frame downtrend to the previous time the market was trending up in the first time frame. It's a 1 bar uptrend, and we've seen the market test exactly to the 261.8% level and be rejected from there. So the Fibonacci ratios are giving us some sort of a hint of a potential change of trend, but as I've mentioned, not supported by any buying action at the moment, other than this loss of commitment from the sellers at these two important Fibonacci junctures. In terms of Ichimoku, we now have a bearish market in the medium term and the fast term time frames by trading down below the Kijun-sen, the pink line, and the Tenkan-sen, the green line here. The market remains bullish in the long term time frame by trading above the cloud, and if we look at this test down below the Kijun-sen, the pink line here, that could be quite significant. It's been a long time since we've seen the market trending down below the Kijun-sen, and previously when it was testing down below there, we had very solid support down below here around this area. We saw the market trading basically sideways, so there is a possibility that could happen again. We may not see the market trade to higher levels for a period of time and test down to these lower levels and find support down around here in this range that extends down to the 1700 level. So a bearish market in that medium term time frame, and maintain bearishness in the short term time frame by trading in a solidly bearish manner down below the Tenkan-sen. This close down below the Tenkan-sen here in a bearish manner did suggest that the market was destined for these lower levels. If we look back here, we haven't seen any solid bearish closes for quite some time, and even when we did close down below here in the recent, below the Tenkan-sen, the green line in the recent past, it wasn't a bearish candle. The buyers actually closed with control for that trading day. But then here, if we look to the 9th of October, when the market closed down below there with a solidly bearish candle, it did set this market up for these lower levels. The market even tested to the Tenkan-sen, and the Tenkan-sen held as resistance. So there is a strong possibility that the areas above here, if the market does trade up as suggested by the Fibonacci ratios, will find resistance around the 1755 or 1767 level, in the area in between where the market's the Ichimoku indicators, the Kijun-sen and the Tenkan-sen are trading. So they are very important levels. So if we do see a change of trend to the upside, it's most likely that the market will halt up within that zone extending up to the 1767 level. But if we do see continued bearishness, then there is a possibility that the market may find support anywhere between this area around 1730 down to around the round number 1700.